Welcome back to the Comstock channel. My name is Brianne Hendrickson. Today I have Joe Camp with us. Welcome.
Hey, good afternoon.
Thanks for being on. We're going to start with grains. Not a bright, beautiful, sunny day.
No, bit of a failure here after a generally stronger start. It's still this back and forth type of trade that we have leading into the holiday weekend where volumes are relatively light and there's nothing that's going up or down, for more than a couple of days. We've definitely observed that with wheat being up and then down and then up and then down. I show a corn chart here and we see that we have had now 3 down days in a row. We're tracking back into that expiration gap. So that's really an important part of what's going on here is just that still you look at that October high and being in a general downtrend from there. It's the path of least resistance that we know is in part influenced by these hedge funds that are maintaining short positions in the market and just waiting for some reason to cover. It could be that we're coming up into the end of the year. They're going to square positions, take profit on shorts, and then maybe readjust heading into the new calendar year. But for now, corn is really taking a back seat to whatever is happening in either wheat, which was down harder today and tagging along there, or sometimes soybeans as they've had some weakness as of late. But this technical picture on corn is going to be key to follow here. We can see we've still got risks that we might fall further into this expiration gap where the December went off. That would bring us down to about 460. And then if we kept going down towards the December low, we've got a key low at 447 to look out for. Again, waiting for fresh news. So without that, it's going to be more about what's going on the charts and about how these speculators feel heading into the end of the year.
Soy meal, how is that looking?
Yeah, soy meal's the product that's been leading the beans lower, but the products in general have shown weakness, and we can see that in this soy crush spread. It's the value of the products minus the value of the soybeans. So it's a representation of the profitability that these processors have to crush soybeans, and we can see how it's dropped quite sharply over these last 3 or 4 weeks. And it's coming down from what were really lofty levels. I mean, knocking on the door of all-time highs. And so it has been bullish and productive for these processors to get their hands on soybeans. But lately, we've seen a ding in that. And that's represented here by this crush chart. Now, there's, again, 2 products, and there's 2 different storylines here. For the soybean oil, we need to watch the crude oil market, right? There's a close link to what's going on in crude. We were quite a bit higher at the start of the day for crude oil futures. We backed off towards unchanged, still holding a small premium here. And that's something we are watching as it relates to what's going on in the Middle East, for one, in a big way, where you have this escalation of what's going on in Israel and now the involvement potentially in a bigger way of Iran, which that's, a big deal for oil. As large of an oil exporter and producer as Iran is, you have any escalation of the conflict now involving Hezbollah and Israel's border to the north in Lebanon, and what's going on with the so-called Houthi rebels and the recent closure for all intents and purposes of the Suez Canal that goes through Egypt. These are all factors that have lately been positive all of a sudden here again for crude oil. But maybe potentially priced in here and not maintaining or sustaining the upside for soybean oil. Now, also weaker, as you started with, is the meal market. That's, I think, really what owes the blame here for pulling beans down here these last couple of sessions from where they started to try to trade higher, but then ultimately fell under the weight of the lower meal. And when we talk about meal, we're thinking a lot about Argentina at the moment. They've been in the news a lot. And for one, you have weighing on prices the outlook for weather in Argentina, which includes some really favorable conditions here in the new season. They're coming off of a huge drought, which is in part why U.S. meal exports are on track for a record year. But now the outlook is sort of shifting into being a less bullish and thoughtful of what could be ahead in terms of a big Argentine crop. But you also have this news about export taxes and this new president taking office, he actually surprised everybody to say that export taxes are likely going to go up. And there was all of the speculation that he would come into office and liberalize in a way that would reduce or cut wholly these export taxes. But instead, they're going to potentially go up over the next 3 years, which could long term restrict outflows for Argentina, but short term, it could potentially encourage farmers to dump their crops before those taxes increase.
Let's talk wheat. It's also yo-yoing, and I don't
not
feel like
much.
this week's a good week for crops.
Yeah, not much for wheat that's going right here all of a sudden, where we had a few up days, a really good string of them. We talked at one point about March Chicago wheat futures closing higher in 8 straight sessions, but then not following through when we had thought that maybe prices overstripped where world values were at. And indeed, that's, I think, the weight on the market here today, where you have wheat the sharpest loser in today's session. And that owing to this news about Egypt. They're one of the world's top wheat importers. They went ahead and purchased a bunch of wheat from Russia. And so here we go again, where it's like Russia is dumping a lot of cheap wheat into the market, and it's hard to compete with that. We haven't had any more of those flash sales to China pop up here as of late. And so it's a dampening influence for sure in the wheat market. But we're also hopeful too. One thing we'll look out for is we've had some showers across the southern plains, and so our winter wheat crop conditions are off to a pretty strong start.
Let's switch over to livestock. Cattle first.
Yeah, one bright spot for the market today would be cattle futures. They were higher, and that's an extension of this recent rebound. It had been a long slide. We were talking about April live cattle futures that were just knocking on the door at $200 and then fell into the 160s just over the course of the last 2.5-3 months. Well, lately some upside, and it fits with something we talk a lot about here. We reference it in the Comstock report. We've got a lot of farmers that are aware of it. This bullish seasonal window that we're in for cattle futures and live cattle, April in particular, that's one where it's been higher through the first couple days of January, the 15 out of the last 15 years. And so that so far fits with the trend we've observed. We sometimes like to think, well, cattle futures in particular make V bottoms. And so this is a strong recovery. And we're hearing good things too about where the cash market is developing and rebounding as well. But to make or break this rebound is going to be the reaction to Friday's cattle on feed report, the next update on inventories here. We look at this chart. I show another really important report that's on Friday along with the cattle on feed report, and that's the hogs and pigs, and that's a quarterly report. And they're somewhat similar almost in the sense that they're going to show that inventories of hogs and market-ready cattle are abundant in the front end, but tapering off from here. So if we look at the all hogs and pigs account, the average estimate is for it to go to 99.5%, and that's 99.5% of last year's value. So down total inventories will be potentially by 0.5%. That's after they had just risen in the last report year over year. So we're starting to see the potential for hog supplies to peak, and that's even going to be perpetuated further when you get into the early part of next year. And that's where we have the pig crop quite a bit smaller on the year, the kept for breeding inventory quite a bit smaller. And then if we were to drill down into farrowing intentions too, there's a range of estimates. I mean, down anywhere from 2 to 5 or more percent. And that's going to tighten supplies as we get into the first quarter of next year. So that's continuing to be the theme here, where hogs, pork supply in the front end, abundant for now, but about to get tighter here, in part responding to lower prices lately. Back to the cattle on feed report, we can see the estimates here where we've got the total on feed account expected up by about 2% over a year ago. And that's going to be a result of what we had observed over these last several reports, where placements were running higher than anticipated. We still have the potential surprise here when we talk about placements, the same that we had learned about over these past several reports, which was that cattle imports, particularly from Mexico, but also from Canada, have been running much higher than historically normal. And so still you have the reduction in the placements. You've got marketings behind, and that fits with what we talked about, where, okay, front end fed cattle supply relatively abundant, but not rebuilding here, and still, by all accounts, historically tight heading into the new year. And that's why, whether it's hogs or cattle, I think we could see some potential strength. And we do, for the most part, in the deferred futures contracts. But heading into 2024 could be a better year for the livestock. And we've got to look at that maybe beginning already for the cattle on a higher market today.
All right, that'll do it for this episode. Thanks so much.
Thanks. Talk to you next time.
Want more premium content? Subscribe to the Comstock Report, where you will receive 2 reports daily. Want more video content? We are on Facebook, YouTube, and now TikTok. So don't forget to like, follow, and subscribe.